Hello, Mr. Deepak Mishra. Thank you for joining the interview with VITV today. Recently, the deposit interest rate cap has been cut down by 0.5 percentage point for the period under 12 months. So, in your opinion, what do you assess about this action of the SBV?
Thank you for inviting me to be part of your channel. And in the last few months, we have seen inflation coming down and stabilizing around 6 to 7%. We've also seen more stability on the macro front. But at the same time, we have seen growth slowing down and enterprises not getting access to credit. So we believe that the response of the decision of the State Bank of Vietnam was in response to help enterprises to borrow more, invest, and grow.
Will this help boost the performance of the Vietnamese enterprises in the coming months of 2013? And do you have any forecast of a further reduction of the interest rate in 2013?
Yeah, good question. I think the first thing is interest rate reductions do help, but only temporarily. That's because, as we have seen in Vietnam, that while the liquidity has increased significantly in the last few months, that is not translated into more credit. And that's because the banks are refusing to lend more. So while State Bank of Vietnam is trying to inject more liquidity, it is not leading to more credit. So any reduction in interest rate will only have limited impact on the real economy. The second thing is interest rate is only one factor in enterprise decision to invest. There are many other factors, including the level of aggregate demand in the domestic economy and external economy. It depends on the investment climate and the business environment. It depends on the quality of governance and some of the structural reforms. In fact, we have been saying that restructuring the state-owned enterprises would be providing a much more stimulus to the enterprise sector and the real economy than any reduction in interest rates. So I think the focus should be more on structural side to kickstart the growth rather than using monetary policy alone to stimulate the economy. Finally, as far as the future rate reduction is concerned, we believe that it will be commensurate to the future dynamics of inflation and growth. If inflation remains higher, it will be difficult for State Bank of Vietnam to cut interest rate in the future.
The downward movement of the Vietnamese dong interest rate will result in a decreasing gap between the VND interest rate and the USD interest rate. And some opinions state that it will put more pressure on the VND. The volatility of VND and against the greenback will occur. So what do you think of this?
We think that interest rate differential between the dong and the dollar deposit is only one factor in determining the level of exchange rate. The more important factors are inflation expectations, current account balance, and capital inflow. So in the current situation where inflation expectations seems to have been anchored at a low level, there is current account is in surplus and there is considerable inflow of capital. We do not see a big risk to the exchange rate because the other fundamentals are very strong in the economy at this point.
We are about to go for the second quarter of 2013. Looking at the first quarter, what do you think is the good point and the bad point of the monetary policy during the first 3 months of the year?
I don't think I'm here to judge the monetary authorities in Vietnam who have a very difficult job of trying to balance many objectives. I think the monetary authorities have to try to maintain macro stability, support economic growth, ensure adequate mobilization of deposit and access to credit. So it's a very difficult job to do, and in that sense I think we believe that the State Bank of Vietnam has done a pretty good job in maintaining macro stability, but they have been less successful in restructuring the banking sector, which has been slow and has taken much longer time than was initially thought. And we also believe that the State Bank of Vietnam could do better in terms of communicating its policy changes to media, to public, much more effectively than has been the case in the past.
Do you think that the SBV want to achieve so much goals? They want to boost the activities of the enterprises. They want to keep the inflation rate down low. They want to boost the cash flow to the enterprises. They want to stabilize the gold market and the foreign exchange market. Do you think with so much goals that the SBV want to achieve will lead to results that did not meet the expectations of the economic experts in 2013?
I think it's a very good question. I think if you look at the mandate of the State Bank of Vietnam, it's very wide and broad. They have a long list of things that, as you said, have to do, including even negotiating loans in operation with the official development agencies, something that most central bank in the world don't do. So it is a very broad objective, but I don't know whether this is something that State Bank of Vietnam wants to have it broad, or they've been asked by the government to be broad. But I think the only point I'd like to stress is monetary authorities are only one component of the various authorities that needs to come together for many of these objectives to achieve. And so we need the fiscal policy to be commensurate with the monetary authorities. With the monetary policy, we need the structural reforms to support the monetary and fiscal policies. So however competent a central bank is, it cannot operate in isolation until it has the other parts of the economy supporting it. So in that sense, we need better coordination of various policies in Vietnam to make progress on these ideas.
Thank you for joining our interview today. Thank you.
It's my pleasure. Thank you.